Welcome to episode 2. We're talking candidly about Vancouver's real estate market. I'm Andrew Hassman.
I'm Jeff Benna.
And today we're going to highlight issues regarding the real estate industry and what's going on affecting you, the real estate consumer.
And remember, we're better realtors than accountants or lawyers.
If you're planning on making any real estate decisions, always best to speak to your trusted financial advisor or tax planner before getting into a transaction affecting buying or selling.
Now, the Bank of Canada raised the core interest rate,
Benchmark rate,
50 basis
50 basis points.
Now-
Wow.
Now, how much is that up since the beginning of the year?
Well, that phone hasn't rung in 3 weeks, so I don't know. No, really, so it's unprecedented. We've seen a 400 basis point lift in the benchmark rate since March of this year. So we're sitting now at 4.25%. The Canadian government, Bank of Canada, they are, in very simple layman terms, doing what they can to cool the economy, reduce aggregate demand, and bring inflation back down to the 2% target level.
Yeah, they have a 2% target level.
Correct.
And in October of this just passed, the inflation rate for Canada was 6.9%. So it's quite a bit higher than what they'd like it.
We've got a long way to go.
We've got a long way to go.
Yeah.
So what's a typical 5-year rate right now?
So the typical 5-year rate, it varies, but I think we're looking at about a 5-year rate around 5.4, 5.5%. That's on a fixed 5-year rate with a 25-year amortization, traditional conventional mortgage, 20% down or more. If we compare that rate to what buyers could achieve back in the early part of 2022, we were around 2 to 2.5%. So obviously we've seen a big increase in the rates.
And I would say their payment, so if you borrow $1 million, your payment at the just over 2% rate was about $4,300 per month. And now it's just over $6,000. So you got about an $1,800 per month increase.
40%.
40%
Yeah,
increase
yeah.
in your monthly mortgage payment. Now, how's that affecting
The consumer.
refinancing?
Yeah, well, so I was talking to a mortgage broker yesterday, and what he told me was that there's a large percentage of mortgage holders that if they had to renew and requalify for that same mortgage today that they're carrying, they actually would not even qualify.
Wow.
Yeah. So I mean, that's what is going on is unprecedented. The inflation, of course, it's just shot up from where it was 2% a couple of years ago, and now we're at 7-8%. And so this is really we haven't seen this sort of thing in decades.
Yeah. And with that increase in rates, what's happened to purchasing power for buyers out there?
Yeah. So I was doing some calculations myself on my trusted mortgage calculator, and I did a calculation based on a $1 million mortgage back in 8 or 12 months ago, qualifying for that mortgage, and with today's rates about 40% higher, or actually not 40% higher, going from 2.5% to 5.5%, the buying power of the consumer has been diminished by about 25-30%. So the $1 million mortgage then is about $720,000 today they would qualify for.
Right. So even though rates have basically doubled more than, it hasn't meant that the purchasing power has gone in half. It's actually come down a little bit less than the amount that it's gone up.
Correct.
Yeah.
Yeah,
Okay.
correct. So again, it affects someone's ability to how much mortgage they can get, and if they've got a specific down payment, the $1.5 million property purchase a year ago, they can't afford that anymore unless they can tap the bank of mom and dad for more money.
Right. And so and have prices come down? I think that's what we've seen.
Yes.
I know certainly since the peak of the market in March and April of this year, we've seen a reduction in a lot of the prices that we're seeing out there. And you know what? Not a bad time to be a buyer in that you're not having to compete now with a dozen other people and non-subject offers, that sort of thing. There could be some opportunities out there.
There's great opportunity, and one thing that consumers have to understand is when the media releases the statistics about the real estate market. Typically, they're very generalized by area. Greater Vancouver, BC, Canada. I try to focus on my market or what's going on in Greater Vancouver.
Mm-hmm.
I hear from what I see in the media that prices out in the Fraser Valley, Chilliwack, Abbotsford, and such, they're down 20% plus out there.
Yeah.
We're doing some business right now up in Sechelt, and I'm seeing about a 17% decline in house prices up there. I think in the west side, it's a little bit more muted,
Yeah.
but I don't think the west side or the east side saw the tremendous run up in prices that some of these outer lying areas saw during the pandemic.
Yes.
So our price declines are somewhat less. So I guess the takeaway is, if you're a consumer and you're living in wherever you're living, try to understand what's going on in your specific market.
In your specific market.
Yeah.
And something else to consider too is I know that there can be a tendency to say, oh, interest rates have gone up. Houses aren't selling anymore. I mean, the truth is, houses are always selling. There's always somebody
Yes.
who's having a baby, getting a job, moving out of their home, their family home or whatever's going on, and so there's always going to be that activity in the marketplace. The other thing that I think people maybe don't look at as much is the opportunity of a down in prices actually makes it a lot easier to trade up to your next home.
Yeah, you think about it. If you're going to spend $2.5 million on your next purchase, and the market's down by, just keep it simple, 10%, that's about a $250,000 decline in market value. But you're coming from a townhouse that's worth $1 million.
Yeah.
And if that's down 10%, it's only down 100,000. So your actual differential is narrowed by about 150.
Yeah.
Right.
So a great opportunity if that's something that you're thinking of doing. Used to be that we would see in a rising market, people would go out and buy first, and then they would sell their current home after the fact. And
Yeah.
they would take advantage of the market lifting up to
Yeah.
ensure that they could sell. I think you can still take advantage of this market, but it becomes increasingly important if you are making a trade up, you've got to sell first. So you know what you're dealing with dollars and cents wise, and you don't have to deal with a contingent listing or a contingent purchase on the thing that you're looking at.
Absolutely, and you definitely don't want to get caught with two mortgages or owning two properties. Right?
Definitely could.
So you'll sell for less, you're going to buy for less, and the nice thing about buying in this market is you're typically the only offer going in.
Yes.
You've got time to do due diligence.
Yes.
If you remember, 12 months ago, if you were making an offer on a condo, a townhouse, or a house, it was typically, you had to submit your bid by a certain date.
Yep.
And if it wasn't an unconditional offer, you basically didn't have much of a chance. So this is a great market if you're a buyer. Yes, there's a lot of negativity, but if you cut through all the noise,
Yes.
it's actually a great opportunity to buy in a slower market.
Yeah. And if you need a home to live in,
Hey,
you can't wait forever.
yeah, well, I always say to my clients,
Yeah.
so you buy the home today and the market's down, and prices actually could go lower into 2023. There's a very strong possibility prices are going to go down. But if your holding period, if you're thinking of buying the home and you're thinking that you're going to be there for the next 5 to 10 years, then it doesn't really matter, right? Because
Yeah.
what's the value going to be in 5 to 10 years? Obviously, we don't have a crystal ball.
No.
But in Vancouver, don't prices in the long run tend to sort of trend higher?
In the career of doing this for 30 years,
Yeah.
and I'm sure you're the same, I know two things. I've met very few old, rich renters. And I've never met anybody who bought a house 10, 15, 20, 30 years previously
Yeah.
that said, I should have waited 6 months before I bought it.
Yeah,
They were
exactly.
just thrilled to have bought it.
Yeah.
Over time, the prices have lifted up, and they've had great accommodation for their family. They've had great cash flow from their investment. It's all been beneficial, but over the short term, and real estate is not a short-term thing, it may have seemed like there was other opportunities or something else they could have done. But over the long term, the
Yeah.
long haul,
And if you're a family with young children, and maybe you're living in a tight 900 square foot condo,
Yeah.
and you're bouncing off the walls, and you need more space, then you need more space.
Yeah.
And so you just basically have to do the math on it, figure out prices have come down in the market that you're looking at. Yes, interest rates have gone up, but if you can make the numbers work, you may find that if when you look back in 5 to 10 years, you actually made a great decision buying in 2023,
totally.
right? So yeah.
All right, great. So, anything else we should?
Well, I
talk
just,
about?
you know what, we love keeping people informed. There's always something to talk about in real estate. I think people tend to get wrapped up in all the negativity.
Yes.
And I think if you can cut through the negativity, there's always something positive to sort of focus on.
Yep.
And I can't stress more, I think that, looking back at my 30 years, and I own real estate, and we bought real estate in down markets.
Yeah.
If you remember, from 1993 to 2000, the market in Vancouver was flat to down for 7 years.
It was.
That's when I first got into real estate.
I know that very well because Heather and I bought our first place. There's a little spike in the graph in
Yeah.
the early 90s. We bought right at the top of that peak and then rode
went
the
down.
market down for 6 years.
Yeah.
And then when we were ready to trade up, I mean, it wasn't fun while it was happening,
Yeah.
but it turned out to be the best thing that could have happened.
Yeah,
to
if you
us.
fast forward 15, 20, 25, 30 years later, it's the
Yeah.
best thing you could have ever done, right?
Totally.
So, and less disruption for the family too, because
Yeah.
how many times do you want to move and try to time the market?
Well,
Right.
and no landlord can call and say, oh, by the way, I sold the place, you're going to have to move out.
That's right.
Yes.
That's right.
So a lot more security, a lot more safety, and just the benefits of ownership.
Yeah.
For me, anyways, I felt like more of a citizen, right?
Listen, we're here to keep you informed. We've got a weekly video series speaking candidly about Vancouver's real estate. I am Andrew Hassman,
I'm Jeff Bennett.
and thank you for watching.
Thank you.